I'm Paul Sanger for the Finance News Network, and today I'm talking with WT Financial Group, ASX code WTL, and they have a market cap of 29 million. Over the past few years, WT Financial Group Limited has established itself amongst the very largest financial advisor networks in Australia. Its wealth management, retirement planning and personal risk insurance advice services are delivered primarily through a group of privately owned advice practices whose advisors operate as authorised representatives under the Wealth Today, Century Advice and Synchron Advice subsidiaries. The group's B2C division delivers a range of financial advice services directly to wholesale and retail clients through its Spring Financial Group brand. We welcome today WTL CEO Keith Cullen. Keith, welcome back to the network.
Yeah, thanks Paul. Thanks for having me back.
Now Keith, you've recently announced that WTL has agreed to acquire the Millennium3 financial advice network from Insignia for $2 million, with settlement scheduled for mid-December. Let's start. You built your network through a series of acquisitions over recent years. Can you walk us through the process behind this acquisition?
Look, Paul, it's interesting because I think last time I was here I said that we weren't, you asked me about, or might have been Abby asked me about whether we were targeting more acquisitions, and I said we'd grown the business to the sort of scale that we thought was appropriate to underwrite all those critical supports that advisors needed, and so that it wasn't part of our overall strategy. But I did say that if opportunities came along, we'd look at them on their merits. And Insignia Financial approached us a few months ago and said that they were looking to sell Millennium3, or M3 as it's known in the market. And look, it's a very good fit for us, Paul. So it was an opportunity to look at. The opportunity to look at it was too good to refuse.
And what natural synergies does the M3 business bring to WTL, and how long will it take to integrate the business onto your platform?
Look, this is what made it so attractive for us, Paul. The first thing I'd say is that as we've brought all of our acquisitions together over recent years, Wealth Today, Synchron and Century Group, is we've plugged them all into a central support hub that we call Wealth Advisor. So we've been able to maintain the collegiate spirit and those brands that the advisors are so used to being a part of on the front end, but to get the efficiencies and ensure we're delivering a broad range of services to the advisors, and the same range of services to all of the advisors, is we brought that central hub into play. And this is the same sort of way that Insignia had been running their advice networks, with some frontline staff that deal directly with the advisors, but most of the services delivered through a homogenised back office across all of their different brands. So it's a perfect fit for us to be able to sort of pick it up, unplug it from Insignia and plug it into our operations. The same technology is being used on all of the critical things like advisor education and training, the software that the advice practices use, and also the commissioning systems and so on, all exactly the same. So it's a very synergistic in terms of being able to unplug it and plug it back in. In terms of the logic underlying it, or where we saw the opportunity for the advisors, but they're going to find a very kindred sort of spirit amongst the advice professionals that we've got in the network. Is Millennium3 has a significant amount of wealth advice within the business and a significant number of holistic advisors, but it's also got a very proud history and a very proud lineage in personal risk insurance. And they'll find a really good home with us in that because it's in our blood as well.
Now, Keith, WTL is already amongst one of the largest advice networks in the country. Post the Millennium3 transaction, what will be your advisor footprint and what size of funds will you have under management?
Yeah, good question. Look, Paul, right now we're around 400 practices and a bit over 500 advisors when you take our general advice advisors in there that are part of our Wealth Today network. So this is going to add about 75 practices to us, so pushing us up towards 500 practices, and it'll take us over 600 advisors in total. In terms of funds under advice, around 23 billion is where we're going to land. So we're about 18 or something thereabouts at the moment. And so Millennium3 advisors are advising on about 5 billion. So it'll take us up to about 23. And then significantly from a personal risk insurance perspective is we were already amongst the largest, if not the largest, personal risk insurance network in the country. So when you added together Wealth Today and Synchron and Century. So adding Millennium3 in there is going to take us well over $450 million of in-force premium, and I'd be surprised if any other network comes close to that now.
Now, Keith, there seems to be a flurry of activity among the ASX listed licensee businesses. Let's talk about Count's recent acquisition of the risk-focused Athena licensee for 3.3 million from life insurer TAL is an example of this activity. Mm-hmm. Then we had the Diverger unsuccessfully bidding for Centrepoint a while ago. Count subsequently agreeing a takeover of Diverger and counter offer from COG Financial, who are now merged with a 19.9% of Centrepoint and so on. So off-market things seem just as fluid, with Australian Unity last week announcing it had sold the Australian Unity Personal Financial Services AOSL to privately held Fortnum. What in your view is driving the interest in this sector?
Well, look, I think if we go back to 2018, in the wake of the Royal Commission, you might remember then, Paul, our business was really direct-to-consumer focused. You know, that was where we'd started. But in 2018, we saw an opportunity to be counter-cyclical when, in the wake of the Royal Commission, we saw the unravelling of the vertically integrated models. You know, the banks and insurers had gone and bought up all of the advice networks, or a lot of the advice networks, over the sort of 10 or 15 years prior to that. And we thought this is going to unravel. Advisors need a good home where they're being supported by people that understand their business from being in the position of being in the room with a client and trying to run a practice. But, you know, a lot of people thought we're a bit crazy at the time, I must say. You know, as some people accused us of running into a burning building, and perhaps that's what we did do to an extent. We saw the opportunity, and we think it's really starting to pay dividends now, which is getting these advice practices back into the hands of people that understand what it's like to sit in the room with clients and build a practice. And I think what we're seeing at the moment is people are starting to recognise that. You know, they're recognising the opportunity. Yes, there's been turmoil from a regulatory perspective, but the opportunity hasn't gone away in terms of the demand for advice. We've seen advisor numbers come down by about 10,000 in Australia to where they sit now, about 15,000. At the same time, we've seen barriers to entry set high. It's not easy to become an advisor now. You know, a 4-year relevant degree, a professional year. So supply has been significantly constricted at a time when demand's through the roof. We've got a wall of capital coming into retirement. We've got a wall of people coming into retirement. You know, the 65 plus market, Paul, between the last two census, when the Australian population grew by 8%, it grew by 19.1%. So there's this wall of people coming to retirement. Superannuation assets are now $3.5 trillion. So there's a wall of money coming. There's this intergenerational wealth transfer we keep hearing about, and I see advisors' eyes glaze over because they worry that this money's been passed on to millennials and so on, and they're going to need to work out how to deal with a younger cohort. The reality is it's not millennials getting it, it's baby boomers passing it to the Gen Xers. And they're the people that advisors are used to dealing with, and they're comfortable with that sort of 45 to 65 market. So I think people are just waking up to, you know, this significant supply-demand imbalance at a time when, you know, regulation gets more complex for consumers. They need help, they need advice. And so we saw it back in 2018. I think others are waking up to it now, and we're just loving having a bit of attention on the sector.
And just to finish up, let's go back to the regulation. You know, it's debated heavily in the papers on a daily, weekly basis. We come to the end of the year. Do you think there's going to be any progress, changes in 24?
Look, I think there will be. I'm on record of saying that anyone that's been critical of this government and this minister for not acting fast enough just needs to understand that there's been a mess of regulation over 10 or 15 years. So it's quite a big egg to unscramble. And there's a lot of us in the space that say, look, there's challenges, there's red tape that can be cut, and there's bigger reforms that can take place to improve the accessibility of advice to the many Australians that are needing it. But right now we know what we've got at least. The last thing we need is knee-jerk reactions, more legislation on top of more legislation. So the government has indicated they're very keen to look to some simple things that will cut red tape. There's a number of compliance things in our game without sort of delving into too much of the detail of it, that are just straight out duplication. We're doing things twice, which pushes costs up on consumers, which is not good. So they're seeking to act on that, and then I think they've got this broader reform agenda that is really important to open up advice to more Australians that just need simple advice. They don't need a financial planner to sit down with them for hours on end. They're looking for simple transactional episodic advice. This government's motivated to get there. I'm just keen to see them do it properly, and if that means waiting a while, I think that's probably good for everybody to make sure we get it right.
Keith Cullen, it's been an absolute pleasure. Thanks for taking the time today.
Yeah, thanks, Paul. Appreciate it.